welcome. You're watching Your Money Matters here at NDTV Profit. I am Mahima Vachhrajani, and today what we're going to do is we are navigating the complex world of higher education financing. Now, in a landscape where aspirations often outpace the kind of affordability that we have, education loans have become a critical lever for students and families. But you know what? They're not risk-free. Over the last few years, as tuition costs, living expenses and global education fees have escalated, public sector banks in India alone have nearly disbursed over 28,000 crore in education loans in 23-24. Now, best colleges yet, only about 4% of higher education students in India actually benefit from education loans, and this is reflecting the stringent eligibility and awareness gaps. Now, in this conversation, I'll try to peel back the layers from when a loan makes sense to how much one should borrow, to the repayment tactics and beyond. And to take this conversation ahead, in fact, we're going to have two set of conversations today. We're going to first speak to Shweta Jain, who's the founder of Investography, about how and when, from a financial perspective, should you take an education loan. In fact, we'll do a combo of this conversation. We'll talk to Adil Shetty, CEO of Bank Bazaar, as well, from a perspective of how the structure of loan should be like, what all should you consider before taking an education loan. Adil and Shweta, thank you so much for taking out the time and joining us on this show. Adil, I'll take the first question with you. To give viewers a perspective, how should an education loan, be seen from a perspective of a person who is borrowing the loan? How are the loans generally structured? What is the tenor like? Is there a guarantor in place? Is there a moratorium in place? Even in terms of the collateral, how does the calculation work there?
Great question, Mahima, and it's good you're covering this topic, because what we see in the Bank Bazaar Aspiration Index is your own home and your child's education are the top aspirations in India. So education typically has a tenor of about 7 to 15 years. Typically, it's a floating rate loan between 8.5% to 10%. There is a collateral if the loan amount is higher. So typically, if your loan amount is above 7.5 lakhs, there's a collateral. Otherwise, you can get it without collateral. A guarantor is required, again, if the loan amount is higher. So typically, above 4 lakhs, a guarantor, typically a parent or a guardian, is required. And the nice thing about education loan, which I've not seen in other loans, is you get a moratorium period. So typically, there's no repayment during your education while there is interest calculated. And for 6 to 12 months after you graduate, they give you some time, which is a moratorium time. So these are the typical structures, Mahima, and we can talk about any of them in more detail.
Right. Adil, you did mention that generally these loans are in terms of floating interest rate. Are there options available in terms of fixed rate loan as well for education loans?
Yeah, another good question. And, there are options, but they're quite infrequent. So what I mean by that is, think of a home loan in the market, because it's a longer tenor loan, right? 7 years, 15 years. Typically, it's a floating rate because the rate can go up or down. So even though there are fixed rate home loans, 95% of the market is floating. Same thing happens in education, because it's a longer term loan. It tends to be floating. You can find fixed rate loan. You can research online. You can, go to a bank website, or you can go to Bank Bazaar. But what you'll find is typically the fixed rate loan has a higher cost. So if a floating rate is 8.5, 9.5, a fixed rate will be higher. So most people end up taking a floating rate education loan.
Understood. Shweta, I'll come to you with regards to where the financial aspect is concerned. From a person who's borrowing the loan, when should he consider borrowing an education loan? What are the financial aspects that need to be taken into consideration?
So when somebody is looking at higher education and bigger amounts, I think this is different for each person. So when they're looking at something which is much more than they can afford first, that is when they should be looking at a loan. Second is, even though they might have a portfolio at their disposal, but they would like to let that money compound and instead take a loan to compensate for that. So I think there could be two instances where one person could opt for education loan. It depends really, the amount depends really on the person and the course that they're looking at, which country they're looking at, etc. Various things like that.
Right. I mean, just out of curiosity, Shweta, is there a thumb rule in place with regards to where your income is concerned versus the loan that you take? And this, of course, should be combining all the loans that you have.
Yeah, so thumb rules, I mean, there are lots of thumb rules that we see. So one would depend on, say, income. So it shouldn't be, say, more than 30 to 40% of your expenses. It shouldn't be more than 30% of your income, all your EMIs put together. But some of these things, like Adil rightly mentioned, are aspirational, and sometimes it doesn't really stick to that. But for easier cash flow and to always have a contingency fund in place would be some necessary items, I would say.
So then, Shweta, how should one determine the quantum of loan that should be taken? Is there a formula in place, or what should one consider before deciding that what amount of loan should I be borrowing?
So there are various items, right? So basically, one is you should not take more than say 2 times your annual income of loan. But it could sometimes also determine that you're aspiring to have a much higher income, whether it is in another country. So, for example, if you're earning 25 lakhs today and you sort of take a break, career break, and go for higher education, you could opt for a loan, even which is say 1.5 crores, if you think that you will be able to earn much higher. But ideally, I think not more than 2 times annual income.
Okay, to not more than 2 times of your annual income. Yeah, that's important. Viewers, that's very important. Adil, with regards to borrowing from a bank, how should you choose a lender? My first question to you. What are the filters that one should look at before choosing a lender? And in your opinion, because Bank Bazaar is probably the place to go to and compare as to which loan should be gotten from where. Which are the lenders that specialize in education loan?
Great question, Mahima. So with education loan, some factors are the same that you would consider with, let's say, even a home loan. But then there are particularities. So let's start with what's in common. So you want to look at interest rate, obviously. So like I said, the range could be between 8.5% to 10%. Secondly, very important is the loan amount, because typically, whatever you've saved, but you have to pay for the tuition, you have living expenses, the hostel stay, and so on and so forth. So you're looking at what is the loan amount each lender will give. Then you're looking at what is the moratorium period. Like I said, it can be 6 to 12 months. You're looking at what tenor, right? Do they require a guarantor? Do you have a guarantor available? And do you have collateral available to pay? So these are the typical things that you would think of, even for a mortgage, a home loan, a loan against property. But education loan gets even more specific because different lenders might have accredited different universities. So your university has to be part of the accredited list of the education loan provider. And, there are different types of education loan lenders, like you pointed out. And this is something, we see there's a wide range at Bank Bazaar. So each one will come with its own benefit, right? So one could say that the PSBs today are offering the best rates in the market. The private sector banks are having quick and convenient doorstep processing. The NBFCs, the specialized lenders, can give you a little bit more flexibility in terms of what is the loan amount. Do you have to provide collateral or a guarantor? They can do higher loan amounts. So it's a very interesting mix where there's no one size fits all. I think some amount of research or some amount of learning, like through shows of yours, is important when one picks an education loan.
Understood. Adil, what about repayment? What should one consider while repaying the loan? Because sometimes what happens is people do take a loan, because there's a moratorium also available, and that gives them a period of accumulation of their wealth. Probably they invest it somewhere, and then generally they can repay the loan using that investment as well. A lot of people do that. While on the other side, a lot of people, repay their loan in different installments. My question to you is, would you recommend somebody to maybe, make a large chunk of payment once the moratorium is over? Would you recommend them to do it, monthly? That's the general way that a loan is repaid. What's the outlook like?
So here's my view. One thing people don't realize is your interest is being calculated from the time the loan dispersed. So even during moratorium, even during study, your interest is accumulating. So my advice, and I made this mistake when I graduated, I waited till the end of the moratorium to start repaying. I'd say start repaying as soon as you can, even if you have a campus job, if you get a bonus, joining bonus in your first salary, prepay as much as you can. So the first thing I would say is, as soon as you can, try and start prepaying. Don't wait till the end of the moratorium period, number one. Number two, right, your guarantor is equally liable for this loan. So this is something to keep in mind. Not only will your credit score go down if you don't repay on time or miss an EMI, but your guarantor is equally liable on all this, right? So it's important not only for you, but it's important for your guarantor. Thirdly, right, repayment of education loan in India also helps you with a tax rebate under ATE. So the interest component is a deductible, and obviously, depending on your situation, you have to talk to the tax consultant. My recommendation is as soon as you can repay, start repaying. 9% risk-free interest is not easy to get. That also tax post-tax. So I would, the minute I had money, once I start working, I would start repaying as soon as I can.
Right. So you would recommend that for example, if I have a certain amount of salary, but if I get a Diwali bonus, I should use that amount to repay as much principal as I can, correct?
Yes,
That's the right approach.
I would say if I could go back in time and I had a big Diwali bonus, I would have prepaid my loan rather than do anything else. Because see, the logic is as follows. Let's say you're paying 9%. You're paying 9% interest post-tax. 9% interest post-tax, it's not easy to make that kind of return. So I would recommend you prepay. And that is the easiest way to pay off your loan. See, keep in mind, right? A 15-year loan compared to a 7-year loan for the same interest has lower EMI. So let me give you an example. So cost of education is sky high, right? At Bank Bazaar, it's the top 2 aspiration in India, child's education. Cost of education is increasing. And some of us, even who have kids in school, know what the cost is. It's unbelievable, right? So let's say every 10 lakhs on a 15-year loan at 9%, you're approximately paying about 10,000 rupees a month in EMI, right? So I'd say that if you can prepay, it's a good option. By prepaying and reducing your tenor, right? A 7-year tenor might have a higher EMI, but the interest outflow is much smaller. So it's always better to pay off your loan in as less years as you can.
All right, and that makes complete sense, Adil. Shweta, my question to you is, Adil was talking about the tax saving aspect. Give us some more perspective as to how one can save tax for a person who's already borrowed a loan. What are the different sections in which, and I believe this is only available now in the old regime.
Yes, Mahima, only in the old regime. This is available, as Adil rightly pointed out, under Section 80E of the Income Tax Act. So any amount that you're paying as interest on the education loan is deductible from your income. There isn't a maximum limit on the amount itself, but principal part is not tax deductible under this section. The duration could be up to 8 years. So within 8 years, if you're paying from the minute you start paying your EMI, you have 8 years to take advantage of this benefit as well. Or, of course, if the loan gets over earlier, then that's the limit. Like I mentioned, there's no upper limit on the amount, so that sort of helps, especially if the loan amounts are higher. You're not really getting too many tax deductions that are available to us. So this really helps, and this is for a purpose where you are upgrading yourself and making sure your earning capacity goes up. So this is something that I think is quite useful.
Shweta, Adil was also mentioning the same thing, right? That as soon as you have money in your hands, you should ideally go ahead and repay your loans. Prepayment is one thing that I wanted to talk about. Is that a good idea according to you as well? Or would you, go ahead and invest, build a sizable sum, and then probably pay it off in one go? What is your recommendation here?
So I would slightly differ. My opinion is that once you start paying the EMIs, your regular EMIs you should pay as soon as possible. You should start. That is good. But the other thing that I would say is start accumulating some funds, especially as a contingency fund. So 3 to 6 months of your expenses as a bare minimum. Because if you do have that cushion, you're going to learn two things. One, in case something goes wrong, you have something to fall back on. The other thing is you're going to learn the art of budgeting, saving, prioritizing. And trust me, at the beginning of your career, these things are priceless. If you're starting to invest, especially, and keeping your EMI, say your EMI is 10,000 rupees, your income is, just argument's sake, say 30,000 rupees, your expenses are another 15. So 25 is already going. 5,000, you have the option of either prepaying or starting an investment fund, something for long term or short term. So once you have something for short term, like I said, 6 months expenses, then you start building it for long term. And trust me, that is something that we need to build as a habit. So once that habit is also established, you have a decent corpus, you can then start paying off. And when you see your money grow, and accumulate, that itself is something which is encouraging to you, and you will start investing a little more, budgeting better, trying to save, and in the initial years that really helps.
Okay, all right. So that's Shweta's view on how you should consider prepaying a loan. Adil, my next question to you is that does the university that you choose have any bearing on the loan that the lenders are giving, and the country that you choose, in fact, does that affect your disbursement in any way?
So absolutely, Mahima. So it's almost like they underwrite the university's reputation. They underwrite the employability you will have when you graduate in that country. So it's very funny, right? Because it's almost like the university represents the house or the car you're buying, right? Or the business you're running. So they do look into all that. In fact, if you're in a premier university, it's more likely to be recognized by the lender to lend against. So every lender will have a list of 500, 1,000, 1,500 universities globally they lend to. And if you fall within these lists they lend to you, the better the university, the lower the interest rate, the higher the loan amount, the less insistent they'll be on a guarantor, on collateral. So at the end of the day, this is very unique to education loan. Depending on which country, depending on which university, you can get much better terms than if you go to a university which is not that well recognized, in a course that they feel you might not get good employment, in a country where it's hard to get jobs. So all this makes a big difference, Mahima.
Adil, from a bank perspective, just want to understand as to how that valuation of loan is arrived at. If you can just give a perspective, because from what my understanding is that they take a look at your bank statement, the collaterals that you have, the properties that you hold, and accordingly the eligibility for the amount is determined. Anything that one needs to take care of while submitting the documents of something of that sort?
Yeah, so the bank is looking at it from two sides. So one, they're looking at what is your tuition fees for the country you're going to, what are your living and accommodation expenses. So that's one criteria. But the thing is, whatever that criteria might end up at, you should have the servicing capability. So they're going to typically look at your credit score. So this is something which is very important. We tell people at Bank Bazaar, your credit score is changing every 2 weeks because the banks are reporting to the bureau. If your credit score or your guarantor's credit score is above 750, 800, it's much more likely that you'll get approved.
One last quick question to both of you, and I'll start with you, Shweta, first. What if you don't get placed once your education is over? What should one do in that situation? Because if you don't get placed, and if the moratorium period also gets over, it gets a little difficult to repay off the loan.
Yeah, so I would recommend one is they always have a plan B. If you don't get a placement, it is today much easier to build a profile, a LinkedIn profile for that matter, and make sure that you're reaching out to possible workplaces that you want to do, and not just in the country that you're studying in, maybe in other countries as well. It might be a smarter choice to have more options available, whether it's in the home country, whether it's in the country of where you've studied, or in a third country itself. Explore your options as to what other kind of work will be available to you, not just a narrow option of where you've studied. If there are minors, you've minored in another subject, maybe look at those options. It could be that you start off at a lower grade than you would want. But I think starting employment immediately would trump some of these things. Of course, it depends on the kind of industry and when they are located, where they are located. So a lot of those things will come into play. But I think having a plan B is equally important, and not just depending on your college's placement, but even your own initiative will be important.
All right. And Adil, your quick view on the same question?
So I think Shweta made a great point. Finding a job is always the best solution. Look around multiple countries, multiple industries. She also raised an earlier point about the emergency fund, which I agree, right? An emergency fund, insurance are all the first things one should do if one has extra money. So make use of that emergency fund. Lastly, and this is the last resort, talk to your lender. Explain to them you're making best efforts. Maybe an extension is possible in the moratorium, maybe 3 months more. Talk to them saying, can you at least pay the interest off so the principal is not accumulating? All these are case-by-case basis. There's no standard, but reach out to your lender, write to them, talk to them. These are some of the things that can be done. Because at the end of the day, right, when there's a default, Mahima, no one wins. The lender doesn't win. The consumer whose credit score go bad doesn't win. No one, the system doesn't win. So, try and find a way in which you can work together to find a solution.
Absolutely. Adil and Shweta, thank you so much. I think our viewers will really benefit from this conversation, especially for people who are looking out for education loans. So thank you so much for an insightful conversation, and thank you so much for taking out the time.